morning and welcome to another live technical analysis. Today we're probably going to be starting off with the euro against the dollar. So I'm just setting up our chart, view, toolbars, charts, line studies, and timeframes. There we go. So looking at the euro against the US dollar, should just close everything that we may have had open as a small test. There we go. So looking at the euro against the US dollar, as you can see, it's moving in a downwards fashion. So yesterday we had the US ISM non-manufacturing PMI figures. So the PMI figures came in better than expected, implying an expansion in the services industry in the US. Now that in theory may have provided some support for the US dollar. But at the same time, the US job openings figure came in lower than expected at around 399 million, if I'm not mistaken. So that could have countered the US dollar. Now, for today, it appears that the dollar is gaining. So the question arises, is this dollar strength or euro weakness? Now, personally, I believe that following Germany's industrial orders rate that came out earlier on today, it's probably more of a euro weakening. And why is that? Well, the industrial orders rate was expected to come in at 0.2%, and it came out in minus 3.7. So I'm guessing you can understand the difference between the expected rate and the actual rate was quite significant. So it appears that the euro perhaps is weakening, given that Germany is one of Europe's largest economies. The lower than expected rate could be leading the markets to believe that the ECB may cut rates quicker than the Fed, therefore attributing the euro dollar's decline towards euro weakness rather than the dollar's strength. I think that we should actually check as well the dollar index. We can check that in a bit. But if we look at all the other pairs, it appears that the euro for the day, the dollar slightly losing against the British pound, actually gaining against the Japanese yen, against the Aussie. So the Aussie, we had the GDP rates for Australia, which could be attributed to the Aussie's strength. Dollar against the CAD, there's the interest rate decision today. But let's look at it from a technical point of view. So as you can see, the downwards moving trend line continues to be validated. Now, there is some distance between the trend line and the current price action, but it does not invalidate it. As a matter of fact, we could see if the current price action validates a downwards moving channel as well. And it's does if it is taken by the wick of this bullish candle, which created this lower high. It's moving it down as fashion. It's validating the downwards moving channel as well. So in theory, it's aiming for S1 at 1.0750. For R1, we could actually readjust our resistance level slightly lower. As you can see, the price action, this bearish candle, it closed and then the bullish candle opened, wick down, and appears to have met support before turning resistance. So my R1 would be 1.0865. R2 could be brought lower to this previous high. And then for R3, now you can see the distance between R2 and R3 is quite significant. So it'd be more prudent to bring R3 to a lower level. You could take this wick, but I'd rather use the candles and taking this high here. Now, two options. It could be, well, we can keep this high, and I'd rather keep that high as had I brought it slightly lower, a bit too close to R2, so we're giving it some room to breathe. So R3 could be 1.1140. We can have R2 at 1.10, 1.1005. Then we have R1 as we had placed together. For support, we're keeping our current support levels. Its previous high, its previous low. Once again, heavy support at this level. So looking at the chart on a technical point of view, it appears to be moving in downwards fashion. RSI is running along the figure of 30, implying a bearish market sentiment. Furthermore, in combination with the fundamentals of Germany's industrial orders rate, which came out earlier on today, we would maintain a bearish look for the euro against the dollar. So, what does that mean for you? Well, perhaps it could move down to S1. And for our bearish outlook to be continued, the next potential target could be S2 at 1.06170. Now, if it breaks below S2, the next target could be S3 at 1.0490. But for now, S3 appears to be further away from the price action. So the next immediate potential target for the bears would be S1, with the next potential target being S2. Now, if something extraordinary happens within the trading session, then yes, we may see S3 coming into play. But for now, that does not appear to be the case, excuse me. So you have S1 and S2. For a bullish outlook, it would need to break above this downwards moving trend line, which will also coincide potentially with a breaking above the downwards moving trend line. And for a bullish outlook, it would need to break simply above R1. And why simply above R1? Well, as you can see, there is a bit of a gap between the current price action and R1. So if it manages to reach R1 and breaks above it, then we could switch to a bullish outlook. And the next potential target could be R2 at 1.10005. But from a fundamental and a technical point of view, maintain a bearish outlook for the euro against the US dollar. For the British pound, if we move on to the 4-hour chart, you can see that we had placed a sideways moving channel yesterday. Now, the price action appears to be resting at the lower bound of this sideways moving channel, so at support at 1.2006. Now, it came back down, but this could be a false breakout, and it's finding some support. So the pound against the US dollar is a bit of an interesting story. So we placed our sideways moving channel. It validated it yesterday, but it's now resting on S1. So what do we do? Perhaps we could bring our S1 to lower ground, slightly lower, perhaps at this previous high, but it's still at S1. So it remains valid. As you can see, it's finding some support. If I extend this and then I zoom in, probably, as you can see, broke above, opened, closed on support, and now is opened and is at support. So you could play this with two ways. One, you could say this is a validation of support and a continuation of our sideways moving channel, as the RSI is at 42. So 42 is the mid figure between 50 and 30. So it does imply some bearish market sentiment, but it's still close to 50. So this could either be a correction with the price action and the pair moving towards R1 or staying between S1 and R1. Now, for now, I would maintain perhaps a sideways bias if the 4-hour candle closes above S1. If it does break below, the next potential target for the bears could be S2 at 1.2390. Further than that, we could have S3 at 1.21950. So we're not going to be changing our support and resistance levels based on the fact that the current candle seems to be validating this as a sign of support. And if it does break below, this would become support and resistance. Now, we've said the bearish outlook. We've also said the sideways outlook. For a bullish outlook, it would need to simply break above R1. Why? It's currently testing support at S1. And if we measure the distance between S1 and R1, it's 115 pips. So if it does manage to come back up to R1 and manages to break above R1, then we could easily switch to a bullish outlook for the pair. Now we have R1, R2, and R3, as we said, but R3 is actually slightly further away from R2, so it could be due slight readjustment to lower ground. Now that I'm looking at it, so I'm taking this point. So am I ignoring this level, which is probably a stronger point of resistance? Consider the gaps between R1 and R2, S1, S2, and then S2 with S3. We should keep it slightly or relatively the same. I've had placed it here. Looks nice, yes, but you can see the gap between the four levels is slightly larger. So we could bring R3 to our ground. So this is where the bearish candle came back down, broke and found support. But since it's broke below, this is support and resistance. It was checked by this wick of this bullish candle here, testing support before moving higher. After it broke below, this is now resistance. So coming back to our chart at the current price action, as we said, perhaps a sideways fashion if S1 is supported and validated and is not made and there's no clear break below. But if it does, we would switch to bearish outlook with the next potential target being 1.2390. We spoke before about the Aussie. So the Aussie might be gaining slightly on the US dollar. And why is that? Well, Australia's GDP rates on a quarter on quarter and a year on year basis for Q3 were released earlier on today. And what did those show? On a year on year basis, Australia's GDP rate actually accelerated. It came in better than expected. If I'm not mistaken, 2.1%. Whereas on a quarter on quarter basis, it came in lower than expected. So you're seeing a bit of a contradiction. The better than expected on a year on year level, which came in on 2:30 in the morning, GMT plus 2. And let's just check with the half hour time frame. And if I'm not mistaken, it's probably this candle here, 2:30. So the initial reaction was positive, potentially driven by the year-on-year basis, the rate, instead of the quarter-on-quarter. But it appears to be have found some resistance, stagnated, and is now potentially moving in a sideways fashion. Now we have support, but based on the recent data, we could simply bring up S1 0.65505 for S1. Now, given that we've brought S1 higher, it would be prudent to bring S2 higher as well. S2, as you can see, it found heavy resistance. When it managed to break above, this would be resistance turned support. And it's fairly close, but not too close to S1. So 0.6345, just rounding it up. Should also make sure, yes, it is aligned. And then for S3, we could keep S3 at lower ground, so perhaps at the 0.6725, just in case S1 is broken, and then we move to S2 and we can keep S3 in place up until it comes into play. We could actually bring it slightly higher, which was the sideways moving channel, and this was a support level. So simply readjust it slightly higher, 0.6285 for S3. And you may have noticed that S1 and R1 are fairly close to each other compared to the other differences between our support and resistance lines. So for a sideways bias, which is actually, as we said before, with the RSI, which is similar to the British pound, but not the US dollar, which is around 41, there may be a sideways bias, but I think this may be a market correction higher and could move lower. It is interesting and could probably depend on news stemming from China. And why are we saying China? Well, Australia is heavily reliant on China for their imports. So if the Chinese economy is improving or recovering, then we may see demand for Australian goods increasing. Now, we should note that tomorrow, in tomorrow's Asian session, Australia's and China's trade balance are due to be released. If China's trade balance shows an indication of an increase in imports, which could be predominantly from Australia, it could actually support the Australian dollar as well, as a greater demand for their goods could also lead to an increase in demand for their currency. Whereas a lower than expected import rate could weaken the Australian dollar, as it may imply that there is less demand for Australian goods. Australia's trade balance, on the other hand, as well, if we see their exports increasing, which is probably going towards China, we may see an increase in the Australian dollar. Whereas should we see their exports declining, it could weaken the Australian dollar. So in tomorrow's Asian session, we may see the Aussie getting some support or resistance depending on what is released. Now, moving on, the US dollar against the Canadian dollar, something that might be interesting for today's American session. The Bank of Canada is expected to release their interest rate decision in today's American session. So the majority of market participants are anticipating the Bank of Canada to remain on hold. And we're also seeing about a 10% probability for the Bank of Canada to actually cut rates. But I would point your attention to the previous accompanying statement made by the Bank of Canada. In that statement, they assumed that oil prices would have remained slightly higher or at least elevated. But that does not appear to be the case. As if I switch to the WTI, so this is crude oil on a 4-hour time frame, but let's switch to 1 week. You can see that it's moving 3, 4, 5, 6, about 7 weeks in a row in a downward trajectory. It's formed the downward moving trend line as well, which would actually readjust on a weekly basis. So it's moving lower. So if the Bank of Canada and their policymakers were anticipating oil prices to remain slightly higher or at least elevated, well, that does not appear to be the case. So what could they do? Well, perhaps they may have more of a hawkish pause. I do not think the bank is going to hike, but they may have some slight hawkish rhetoric in their accompanying statement. In such a scenario, we may see the Canadian dollar, aka the loonie, gaining. So you can see it's made an upwards moving trend line. It's still validating our upwards moving trend line, but it could move in a sideways fashion given that the RSI is at 56 up until the release of Canada's interest rate decision. Now, if it does sound predominantly dovish, we may see the loonie weakening. So the US dollar gaining, perhaps breaking above our one and moving towards our two. We're not going to be readjusting our support and resistance levels for this particular pair. If you'd like, you can simply take a screenshot and place it on your own charts as well. And you can follow the price action as it develops throughout the day. Now, another reason as to why we're not changing it is simply put, it appears to be still valid. It hasn't broken above R1. It hasn't broken below S1. It's actually in between. So this is ideal for a sideways bias up until to the interest rate decision of the Bank of Canada. Our size is still near 50, but aiming towards 70. So there might be some bullish tendencies, or it could be simply correction to the upper range of the Bollinger Bands before remaining between S1 and R1. Moving on, we're going to be looking at gold. So gold is an interesting story. Had I placed gold on the daily, it would have been relatively tough to place support and resistance levels, in particular resistance. But if we move on to the 4-hour time frame, you can see that it's bounced off support 2020, and then you have R1 2048, and then we have R2 2088, and then the new all-time high at 2136. Now we could actually readjust our support level slightly higher, 2016 or 15, but 2020, 2015, actually might be better for 2016. So you have S1, S2, and then you have S3. Based on the RSI, it's at 43, so there are some slight bearish tendencies, or given that it's still near 50, it's not below 40, so it's not like 39, which would be implying more of a bearish market sentiment. But from a technical point of view, it appears that this could be a market correction slightly higher, perhaps taking some individuals that may have gone long before moving in a downwards fashion. For now, though, from a technical point of view, now this was overbought, it corrected lower. It's broken below our second upwards moving trend line, and if it manages to break below a third, we could switch to a bearish outlook. But for a bearish outlook, it will have to break below S1 of 2016. The next potential target for the bears could be the 1988 support level, and further than that, we'd have the 1957. Now, in the extreme scenario that we see a similar price movement, now you could place S4, I'd say, but if we're expecting something significant and it manages to break below S1, S2, S3, I think the last line of support could be at the 1915 level. But for now, given that the price action appears to be relatively stable, so not significant moves as these candles you're seeing here, rather smaller candles, we would maintain S1, S2, and S3, and R1, R2, and R3. From a fundamental point of view, gold might gain should tensions continue to rise in Latin America, in particular Venezuela and Guyana. So, as we said the past few days, the referendum was in favor of the Venezuelan government. If the government of Venezuela does decide to engage in a military action in order to reclaim back some of the territory that they consider to be theirs, we may see the potential risk of another war increasing gold's price. So, from a fundamental point of view, it could actually support gold's price. But from a technical point of view, I would maintain a bearish outlook if it manages to break below S1 of 2016. The next target, I've said, 1988. Now, moving on to oil, which we mentioned before when speaking about the Canadian dollar. So, oil is an interesting story. I think it was a report by Reuters earlier on today that was explaining how Russia is managing to evade oil sanctions. Now, on a personal level, that does not surprise me. I always believed that there was a possibility that evasions for oil were in place, given the increased use in the Arctic Circle, increased demand from China. But it appears that there's an article as well for oil. So what's going to be interesting today for perhaps oil traders? Russian President Vladimir Putin is expected to meet, I'm guessing, with the Saudi Crown Prince, but it's been noted that they are going to be meeting today in Saudi Arabia. So there's a foreign trip taking place. And what could they discuss? Well, there were some news reports that were discussing, or stated, I would say, that they're going to be discussing about oil. So, what's the dilemma? Saudi Arabia wants higher oil prices in order to support their giga projects. So, higher oil prices and their ability to actually influence their oil production could create revenue for Saudi Arabia, therefore, more money which could be spent towards their projects. Whereas Russia wants to increase their oil production, so supply into the market, but they don't want the lower prices. They want to benefit from higher oil prices, even though they may be avoiding some sanctions, so in reality, having little to no impact. So, what could they discuss? Perhaps they could discuss more voluntary oil production cuts from the two nations, because I don't think the United Arab Emirates would agree. As we've seen, there appears to be some cracks in the alliance in terms of excuse me, in terms of the willingness of other oil producing nations to reduce their oil production levels. So I would believe that any agreement being made would be between simply Russia and Saudi Arabia, perhaps increasing their oil production cuts. So Saudi Arabia would benefit from perhaps higher oil prices, and Russia could continue exporting their oil to non sanctioned countries and continue creating some revenue, which could bolster their domestic economy. So, in theory, if they do agree, that could actually bolster oil prices. But for now, it appears to be moving in a downwards fashion. You could actually see a slight slanted downwards moving channel being formed, but we'd have to check that together now. If we take the wick of this bearish candle, it appears to be validated. So, from a technical point of view, we would maintain a bearish outlook for crude oil, and we could actually bring our R1 level to this lower high, 73.95 rounded up. And then you have between R1 and S1, the RSI is at 30, 30.9, so implying a strong bearish market sentiment. So from a technical point of view, it would support our theory for a bearish outlook for oil, 73.95. Then you have R2, 77.25, and then you have S1, S2, and S3. If you like, take a screenshot, place it on your own charts, and then monitor the crude oil's price throughout the day. We're also going to be looking at some stocks. Perhaps we could look at Apple or we could look at Amazon. It appears that a news flash on Bloomberg stated that Amazon might be preparing for a price war against Shane. So, in the event of a price war between Amazon and any other company, it could, in theory, weigh on the company's price. So, why could it weigh on the company's price? Well, if I'm lowering my prices in order to compete with someone, or and now this is pure hypothesis, if you're lowering your prices in order to kick out a rival from the market, so engaging in a price war, then that means you may be generating less revenue. Higher profits, excuse me, higher prices increase profits. Lower prices, lower profits. So if they do actually engage in such action, it could weaken the company's stock price as market traders or investors may anticipate that the company's earnings may be reduced. Now, we should also note that in the event that you engage in a price war, you could face scrutiny from regulators. But lowering prices, how much scrutiny you would face from a consumer point of view, I don't think so. Had you raised prices, perhaps. Lower prices, a bit of a gray line, as the consumer would benefit from increased competition and lower prices. So perhaps minimal scrutiny. So you could have S1 under 44.65. This bearish candle found some resistance, and then when it managed to break above, you could say it's support, but it'd be more prudent to use the most recent candle, 142.75. That would be S1. For S2, so you can see the price action is moving. There's gaps. It's a bit jumbled, so to speak. So let's just remove this. Let's move this, and let's move this too. So S1, based on the recent price action. Now S2, as many candles as possible. So you see it found heavy support when it managed to break above, was resistance, and then found support at this point. and moved higher. So that could be S2. And then for S3, we could take this previous high on 32.44, uh, but it's a bit too close to S2. So perhaps we could take this previous low. Now, it is quite difficult to find the exact level of support in such a company based on the 4 hour time frame. The reason why we're not using the 15-minute or the 30-minute is simply put, it's far too volatile. Given that we're conducting our analysis and we're anticipating this to continue for the next few days, it would not be wise to base support and resistance levels based on a 15-minute or a 30-minute chart. So we're using the 4 hour. So S2, 136.75. So that could be RS2. Let's just bring our text labels 142, not a buy limit, 142.75. Then for S2, as we said, 136.75. Let's just round this up. There we go. And then for S3, 130.20, 131.20. That dollar may be huge difference depending on what leverage you're using. So 131.30, 131.20. And then for resistance, previous high, failed to break above, moved lower, tried to wake up to test resistance, 148.25. And then we need to go back and look at the historical data for Amazon, stock split. Aha. Okay. So this is essentially a guessing game. We don't have prior price action, so it's up to us to determine where the next potential levels of resistance may be. Now, if we compact, this appears to be relatively close to each other, but given that it's approximately $5 to $6 apart, valid. Then if we continue with that theory, R3 could be at 160, and then we could measure the distance between our resistance levels as well. As you can see, far too close. Let's go 163. Now this is random, so we should check R1 and R2. 800, 730, and if you click, let's just see. So around 164, 164.20 would be equidistant, relatively equal. Then you have our 256.10, and then you have our 56.10. That would be our 2, and then we have our 148.25, not 65. So we've readjusted our Amazon chart as well. We haven't done Apple, we haven't done Deutsche Bank. We have quite enough time. Let's do those some indexes. We actually haven't done the dollar against the Japanese yen. We've done the pound. We'll see the pound before we finish our live technical analysis. So we'll go back. Dollar against the Japanese yen. 4 hour. Could be the formation of another sideways moving channel. Now, whatever we say, I think at the end of the day, what will most likely or could probably drive FX pairs is the NFP data on Friday. So what we are seeing today, or what we're saying, for example, a bearish or bullish or a neutral outlook, valid up until Friday or even up until tomorrow when we're going to have our next session together. So from a 4 hour time frame, it appears that the price action is validating a sideways moving channel. The RSI appears to be supporting that theory as well, given that it is at 50, applying a sideways bias. It's at the mid-range of the Bollinger Bands, which I've slightly narrowed as well, appear to be moving in a sideways fashion. So it comes back up to R1, 148.30. It hasn't broken below 146.25, so we maintain a sideways bias for this particular pair as well, as long as it stays between 146.25 and 148.30. If it breaks below S1, next target could be 144.40. If it breaks above R1, so 148.30, next target could be 149.70. We're going to be looking at the S&P 500, Dow Jones 30, and the Nasdaq 100 today. Sorry. So S&P 500 found support 4,535. So we're on the daily chart. On the 4-hour chart, you can see it's still validating our support level. It's narrowed, so low market volatility, but we're going to be using it daily. 4,630 could be our R1, then we have R2, and then we have R3. So having broken our upwards moving trend line, we could maintain a sideways bias. But what is interesting is the RSI indicator below our daily chart. Now, if you look at that figure, it's at around 66. So it implies a strong bullish market sentiment, which does not appear to be represented in the price action. So what could that be? Is it a lagging indicator? Is it wrong? Well, if it's 70, it implies that there is a bullish market sentiment. But you could actually look at the values as well. Excuse me, the volumes. So volumes green and red. So as we can see, there was a reduction in volume, but the price action moved higher. There may be a bullish market sentiment, but in terms of volume, it appears that the bears may be preparing to take control of the S&P 500. So if it does break below S1, I would switch to bearish outlook, aiming for R2, excuse me, S2, 4,345. Now, if the bulls manage to take control of the bear, excuse me, of the S&P 500, we may see a break above R1, so 4,630, with the next potential target being 4,795. But given that it's broken below our upward moving trend line, the volume is slightly concerning. RSI is showing another picture. From a personal level, I think it does depend on the US employment data, which is due to release on Friday. I think up until Friday, if we see any gains, it may be minor. Perhaps simply breaking above R1, but not breaking above R2. And if it does break below S1, could be even temporary. And I don't think it would break below S2 up until the NFP figures and employment data, which is due to be released on Friday. So based on that, I maintain a slightly sideways bias, but S1 and R1 are fairly close to each other, so that could change at any time. It'd be more prudent for us to revisit this tomorrow. For today, RSI, volume, but breaking down, so you have conflicting technical indicators. So I take it from a more fundamental point of view. If you believe that the employment data on Friday may surprise the markets, then perhaps we could see the dollar strengthening, which could result in the S&P 500 weakening. From a personal level, I think that the markets are essentially ahead of themselves. I would consider the Fed to be the father and the markets to be the child. The Fed is telling, well, the father is telling the child, don't run, you're going to hit your head. And the child continues running up until he hits his head. And the Fed, I think, may be warning us that the markets may be getting ahead of themselves. So in such a scenario, from a more macro perspective, I think that the S&P 500 will actually decrease. From a technical point of view, it does not appear to be the case just yet. We can see New Zealand dollar and US dollar as well. Sure. Chart window. So we have a pre-made template, which is actually my own template number 1. So properties, let's move the grid lines. Open, high, close. I think this is okay for your eyes as well. We're going to be looking at the 4-hour chart. Now we need to add some indicators as well. So we could have the Bollinger Bands, 20 time period, and then let's add actually volume as well. I like using the volume. That's a personal preference. And then What else could we see? Relative strength index, so RSI, 14 time period, blue, 15. So let's see what we have with the Kiwi. From a fundamental point of view, I'm not that well read on the New Zealand dollar, but let's see from a technical point of view. Immediately, you could see an upwards moving trend line that's actually extended and was broken on the beginning of December, if I'm not mistaken. No problem. Began on the 14th. Yes, we have daily lives. They occur at around 12 a.m. GMT plus 2, where we look at various pairs, stocks, and anything that you may wish to ask. So, based on a technical basis, purely from the trend line and nothing else, it's broken. So, it would either be a sideways or a bearish bias. For a bullish outlook, it would have to break above. And let's just place our support and resistance levels. So, this was a high. You can see by this candle, this wicked up. I personally don't really like taking the wicks. If I have no choice, then I'll use a wick, but I'd rather use the opening and closing figures of candles. So for R1, we could do 0.6208. And then let's just move that. Now, depending on what we're looking at, it could be a distance of between R1, 63 pips, could easily be broken if there's high volume. And this should be enough for a more macro perspective. So perhaps not for simply today, could be used for the next few days as well. But based on it's on the US dollar up until Friday, probably. So we're seeing that it's finding some support at this level. And why are we seeing some support? It wicked down, but it's not precise. But these two candles, which is why I'd like to use the opening and closing figures, is the bearish candles close and the bullish candles open, which makes sense, but it appears to have found support at this point. It even did not even wick down. So turning this not to olive green, but to dark green. So this would be S1, 0.6125. Now we could look at S2, and based on that, we're keeping some distance between our resistance levels for this analysis, or at least the support and resistance levels to be valid for not just today, but perhaps for tomorrow, when we're giving it some space. The distance between R1 and R2 is about 97 pips, and this could be 114 pips, so still relatively the same. And this lower low, this low, which was the beginning of our upwards moving trend line. Now, had we taken a downward moving trend line from here, it's a bit too close. We use the wick of this bullish candle, so it's broken it. The Bollinger Bands have narrowed in between S1 and R1, so we could switch to a neutral bias or a sideways bias. RSI is at 47, so it implies a neutral bias from the market. So you have S1, S2, and S3. You have R1, R2, and R3. Now, if you'd like to place a sideways moving channel, the price action would have to come back up to R1 and then fail to break above R1 and come back down to S1. And then we could entertain the theory of, but if we actually look at further back in time, et voila. So if we take this bullish candle, which managed to break above, and then we consider this wick as the first test of resistance, which was validated by this candle, then we might actually have a valid sideways moving channel. So 0.0625. And then because MT4 is a bit archaic, we're trying to take the wick on this doji. You may actually have a sideways moving channel for the pair from a technical point of view as well. It's broken above our downwards moving trend line. RSI seems to be supporting that theory. There's a bit of a bearish market sentiment, but if you see the candle, it's minimal. It's small compared to this strong buying volume. It's not that significant, I'd say. So perhaps for the next day or two, between S1 and R1, narrowing of the Bollinger Bands further supports this hypothesis. And from a technical point of view, sideways moving channel, breaking above a downwards moving channel, having broken previously from a more longer term upwards moving channel, appears to support the theory of a sideways bias for the New Zealand dollar against the US dollar, aka the Kiwi. We also could be looking at one last stock just to finish off the day. Lockheed, Ford, Morgan Stanley. Uh, let's look at Goldman Sachs, a personal favorite of mine. We could keep our support and resistance levels, or we could actually bring this one slightly higher, two slightly higher as well. Let's keep S3 as it was previously. So 334.50 or 1. Now, this is why I don't really like using wicks. If I take, but in this case, we don't have to. So I've looked at this bullish candle and this bearish candle, which seems to validate that there is resistance at this point, validated by this candle, which was recently formed. So R1, R2, and R3, S1, S2, and S3. It's broken below our upwards moving trend line. But has it actually broken below? You see, the previous upwards moving trend line, ignored. This could have been a false signal, but if we're more correct, if it manages to break below, sideways. Why? Look at the drop from the RSI from 70 to 50. So it appears that the bulls may have lost control over the direction of Goldman Sachs. So staying between S1 and R1. And with that, that's going to be doing it for today. And we'll see you tomorrow at 12 a.m. GMT plus 2. Have a nice day.
Hello everyone! The term risk-off refers to the mood of traders and investors in the financial market when they want to avoid risk exposure and safeguard their funds. When traders are pessimistic about the economic outlook, they tend to sell risky assets and buy safe haven assets. In such an environment, safe haven assets like the Japanese yen and gold tend to gain in value, while high-risk assets like stocks and commodities tend to decline. Markets are frequently labeled as risk-on or risk-off. Both of them express global market sentiment. Risk-on, risk-off is frequently abbreviated as RORO. This happens when price behavior is driven by investors and traders' changes in their risk tolerance. When traders are not optimistic, then they tend to reduce leverage, selling risky assets and buying safer assets or even preferring cash. US Treasuries and German bonds are considered almost risk-free. The US dollar, Japanese yen, and the Swiss franc are safe havens and tend to rally when traders want safety during times of uncertainty. The price of gold usually increases and the yield on government bonds falls. Thank you so much for watching us today, guys. Stay tuned. Bye-bye.
Hey, thanks for waiting, everyone. Let's go ahead and get started. So today's webinar will be on pivot point trading. And before we get started, as per usual, a risk warning. Our products are traded on margin and carry a high level of risk. And it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie. I'm an investment analyst from Everest Watching Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. Firstly, we're going to be looking at what exactly are pivot points, followed by what time frames you should use, and then the different types as well, and adding them into your strategy. Okay. So what are pivot points? Okay. So pivot point is it's a pretty popular trading analysis strategy that's commonly used by traders to determine potential levels of support and resistance in the market. So pivot points are basically calculated using the previous day's highs, lows, and the closing. So a series of points are derived from those values. Okay, so just for your information, if you're wondering how exactly can you implement it into your trading strategy, so you would first calculate the pivot point, okay, which is basically the average of the previous day's high, low, and close prices. And this is the most important level because it represents the it basically represents the points at which market changes direction, which is why you can then use them as support and resistance levels. Okay. And then the first support level is calculated as 2 times the pivot point minus the previous day's high. And then the first resistance is calculated as 2 times the pivot point minus the previous day's low. And then the second support and resistance levels are calculated by adding and subtracting the difference between the previous day's highs and those to and from the pivot point. Okay. Yeah, but we'll get into that in the next few slides. And normally these points are calculated for you already. So these points, it's important to note that the pivot point trading strategy should be used in combination with other technical analysis tools because they tend to be predictive instead of lagging, which uses information from the previous day to calculate potential turning points. Okay, some basic points. So this is what I was talking about how to calculate your pivot points. Okay, but yeah, as I mentioned, these are normally calculated for you. But yeah, so firstly would be to calculate the pivot point. Secondly, calculate the support and resistance levels. And then lastly would be to use the levels as entry and exit points. So if the market is approaching a support level, you can consider buying. And if it's approaching a resistance level, you can consider selling. Okay. Okay, so there are a few types of pivot points. Okay, so firstly, we have the standard pivot point. So this method involves using a simple calculation to determine the pivot point. So that's basically the average of the high, low, and closing prices from the previous trading session. And then the support and resistance levels are then calculated based on the pivot point. Can you get the slides? I don't think that we send out the slides, but this webinar is recorded and I think it will be posted on YouTube, so you can refer to it whenever you want. Yeah, I think the IronFX YouTube is just IronFX on YouTube. Yeah, should be. Yeah, if you're unsure of anything, feel free to just email IronFX. You can get the email on the website. Sure, no worries. Okay, and then our second point is the Woody pivot point. So this method uses a really similar calculation to the standard pivot point that we just talked about. The only difference is that there is a different weighting of the pivot points. The pivot points. So like the high, the low, and the closing prices. So the support and resistance levels are calculated based on the pivot point with additional levels of support and resistance added based on the difference between the pivot point and the high, low, and closing prices. Okay. Thirdly, we have the Camarilla pivot point. So for this method, it's based on a pretty complex calculation. Okay, it involves using multiple levels of support and resistance. And the formula for calculating the Camarilla pivot points includes four support levels, four resistance levels, and the pivot point itself. Okay. Fourth, Fibonacci pivot point. So this method uses Fibonacci retracements to determine the pivot point and support and resistance levels. So the pivot point is calculated by taking the average of the high, low, and closing prices, and then adding or subtracting a Fibonacci retracement level from the pivot point to determine the support and resistance levels. Okay. And lastly, we have the DeMark pivot point. So this method uses a series of complex calculations as well, but the calculations basically take into account the relationship between the previous trading sessions' high, low, and closing prices. Okay, but also the current trading session's open price. So the main differences between the various pivot point trading strategies are just the formulas that are used to calculate the pivot points, but also the placement of support and resistance levels. So depending on your personal preferences and the specific characteristics of the market that you're trading, you can then implement these different methods. Okay, so let's look at the pros and cons for each of them. So firstly, we have standard pivot points. The pros of this is that it's pretty easy to use. So it's the most widely used pivot point method. It's also easy to calculate and understand, provides a good overall picture of support and resistance levels. Cons is that it may not work well in volatile markets, and it doesn't take into account the opening price, which may be significant in some markets. It's also less accurate than other methods in certain market conditions. Okay. Next we have the Woody pivot point. So some pros of this is that it's pretty popular with short-term traders. So if you're a scalper, this would be probably a better option. So this uses the current period's opening price and provides more weight to recent price movements. Okay. Cons is that it's less used as it's less effective for long-term trading and it may not work well in markets with low liquidity. Okay, next we have the Camarilla pivot point. So some pros of this is that it's popular amongst day traders and provides more support and resistance levels compared to other methods and can be used to identify potential breakouts. Cons is that it can be difficult to calculate as well as understand, and it might not work well with markets with low liquidity and may require more frequent adjustments compared to other methods. Okay. Next we have the Fibonacci pivot point. So this uses the Fibonacci retracement levels to identify the support and resistance levels. So if you are wondering what is Fibonacci, okay, maybe I will show you guys in a little bit. But it can be effective in trading in trending markets and can be used in conjunction with other Fibonacci tools. Cons is that it may not work well in volatile markets or markets with low liquidity and can be less accurate than other methods in certain market conditions. So it's all really based off of the current market conditions that you're looking at, as well as your own personal trading strategies. Okay, the mark pivot point pros is that it's popular amongst institutional traders and can be used to identify potential trend reversals, provides multiple levels of support and resistance, but cons is that it's difficult to calculate and understand and may require more frequent adjustments compared to other methods and may not work well in markets with low liquidity. Okay, so some timeframes that you can consider when you're using this. Firstly, what I want to highlight is that for this time frame in this example, we're on the M15 view and you can see that it's pretty unclear. Like the market structure is unclear. If we're looking at this example, when I change, it's the same chart, okay? If we're looking at the same chart but on a H1 view, we see that the market structure is a lot clearer. So the point that I'm trying to make here is simply that um, the clearer the swing low and the clearer the swing high, the clearer the trend between these 2 points, the more accurate your analysis will be. So here I'm talking about Fibonacci retracement, but of course, this applies for pretty much anything like your pivot points as well, because especially for your Fibonacci pivot points. Okay, but the time frame formula for pivot point strategy for intraday it's H4 and weekly it's monthly. Okay, now let's take a look at some charts. Okay, let me just pull out my charts. Okay. Okay, so let's take a look at maybe pound yen. Okay, just a super random example to show you guys. Okay, so I like to start off by looking at it on the higher time frames first. So I'm gonna look at it from a weekly time frame so that I get an idea of where prices are headed towards. Okay, so on our weekly time frame, we see that prices are in an uptrend. On the daily time frame, we also see them in an uptrend. And on a 4 hour time frame, it's also pretty bullish, except there is a slight reversal over here. Okay, so let's go ahead and analyze this together. So if I'm using pivot points as support and resistance levels, for example, also let me know in the chat if you guys normally use pivot points. Okay, so I'm looking at this on the because my chart I'm using now is the 4 hour time frame. Okay, so I'm gonna change to um Okay, so if depending on which time frame you are looking at. So in this case, if I'm looking at the 4-hour time frame, you obviously wouldn't want to be looking at the quarterly time frame because it's a bit covers too much of the time frame. Okay, so you might want to stick with either monthly or even weekly. Okay, but I typically prefer monthly because weekly is a little bit um too recent. Okay, and I also prefer to just look at okay, if you look at here, the settings for pivots, this is the pivot point for standard. Yeah, the standard settings. Okay, so I will look at the pivot, the S1, but I don't typically like to look at the others because it tends to get too um convoluted and I don't like my charts to be too messy. Okay, so I like to just filter it out to just look at the pivot point as well as the first two supports and the first two resistance levels. Okay, so from here, this is actually a really good aid to help you determine where you should place your support and resistance levels. Because you can see here where my R2 is at, this is typically where you would place your R1 anyway. Okay, because your first resistance would be the closest swing high to where price is currently at, which is over here. Okay, so and then followed by you see this R1 here. If I follow that, I'm at this next swing high, which I would have placed here anyway. So it's basically telling you, um, basically helps you to support your support and resistance levels. Okay. Oop, no, this is my first support. Okay. Especially in this situation my where this is the highest level, in the sense that I don't have any other reference swing highs where I can place my next second resistance. That's where these levels come in pretty handy. Okay, so we go in with this first, and then I can adjust it later with my Fibonacci levels. Okay, so I'm gonna place my first support there, maybe my second support here. Okay. Okay. So because we typically want to follow the trend, and here we see that it's an uptrend, and on our daily as well as weekly time frames, we've also seen that it's an uptrend. So we'll typically follow the direction of the trend unless unless we think that price is gonna reverse. Okay. But from the start we would just go with the trend. Okay. So here now I'm going in with my support and resistance, I mean my Fibonacci levels. And here, the first thing I'm going to do is using a Fibonacci projection. So this tool here that I'm using, this tool, it's called Fibonacci extension. Okay, trend-based Fib extension, but we call it a Fibonacci projection. Let me just hide this so that it's not so messy. And you can see that my Fibonacci projection levels actually match up with my first resistance, first support, and second support. Okay, and in order to use this, we want to look for a flash kind of shape like this. Okay. Next, I'm going to go in with a Fibonacci extension. So for Fib extension, we are looking at the values that are greater than 100. So namely these two. Yeah. But you can look at this as well. Let's see if there's any others. Yeah, but namely those above 100. Okay, and for this, but the kind of shape that we're looking for is a Nike tick. Okay, so it has to retrace 100% of the head of the tail, of the head of the tick. Of the head of the tick, it has to retrace 100% of it before you can go in with this strategy. Okay, but you're basically looking for a V shape or a tick. Okay, so if we look at this tick here, this Nike tick shape, okay, maybe I can draw it here instead. No. Okay. Yeah, so for my Nike tick, you can see my 127 lines up with my 100% as well as my first resistance here. So let me highlight it here. Okay, and then my second resistance kind of lines up with my 141. So I'm just gonna adjust it below here. And then we have a 161, which is quite a distance, so I'm gonna just ignore that for now. Okay. Okay. Now let's go in with a retracement. So for Fibonacci retracements, we use these 5 levels. Okay. And then you can see that my 23.6 lines up with my first support, and so does my 50%. Okay, so I'm just gonna keep those 2 levels. Okay, so if I put back my pivot points, and change this to monthly like it was earlier, you can see that it has helped me to identify certain resistance as well as my support levels. Okay. You can see my R1 is at my first support, first resistance is there, supported by a whole bunch of Fibonacci values. So this helps you to get more Fibonacci confluence areas, which you would know is pretty significant because it basically areas of Fibonacci confluence, like over here, your first resistance, tends to attract price more. So then you can predict whether prices are going to reverse off of it, are going to test that level, so on and so forth. Okay, let's finish our analysis for this chart and then we can look at another chart. So as I mentioned earlier, we're going to go in for a buy because we tend to follow trends, right? So even though we see it reversing off of our first resistance, let's see, price is moving above the Ichimoku cloud and MACD is also giving us a bullish signal. Okay, so it supports our bullish analysis. Let's look at RSI. Okay, RSI is also giving us a bullish signal. Cool. Okay, it's also giving us a bullish signal. And let's see. Let's look at EMA and SMA. Okay, we can see price moving above both of these values. So it's also giving us a bullish signal. Okay, so pretty bullish over here. yeah, we might see a reversal back to our first resistance because it does tend to attract price. And when that happens, we can go in for a buy towards our next resistance, which is the second resistance here. Okay. Okay. Next. Any questions? Any charts you guys would like me to go through? Okay, let's go ahead and look at the Aussie dollar. Mm, Okay, on our weekly time frame, okay, we see prices being pretty bearish. Okay, with prices moving in this descending trend line. So just to recap, what makes a valid trend line is if there are a minimum of 3 touches on our trend line. But here we have 4. Okay, but yeah, minimum 3. And then on our daily time frame, it is, yeah, we also have a descending trend line. So also pretty bearish here. Okay. Let's look at our 4 time frame. Okay, now 4 time frame looks pretty bullish. Okay, we see prices moving upwards. Okay, now let's go in with our Fibonacci, or rather our support and resistance levels, because we don't have any trend lines or trend channels. Okay, so here's my first resistance. Actually, because this is pretty close to where price is currently at. So I'm just gonna label it like this. Um, and then maybe over here for my first support. And here for my first resistance. Okay. Okay, now let's check our support and resistance levels using our pivot point indicator. Okay, I'm using 4 hours. So my pivot time frame, I'm gonna put it as monthly. Okay, can you guys see how my resistance levels line up with my support and resistance levels? Okay, the only one that doesn't line up you can see is my first support, which is pretty far away from these levels here. But I can see that my support level here shows me that I can pull it back here. Okay, and then now I'm in line with another one here. Okay, so you can use the pivot point strategy to support your levels and adjust accordingly. Yeah, but it can get a little bit messy, so you can always, there's always the option of um hiding it in the meantime while you are doing your Fibonacci analysis. Okay, so now that we've done that, I'm gonna go in with our Fibonacci levels, and you can see that. Okay, my 78.6 lines up nicely. Just gonna keep that. And maybe my 100 as well. And let's see. Okay, I'm gonna check for a Fibonacci expansion. So for expansions, we use the negative numbers. So earlier for extensions, for the Nike tick, we were using the values that were greater than 100, and now we're using the values that are less than 0 for expansion. And for expansion, similar to projections, we are looking for this flash shape or like a lightning bolt kind of shape. Okay. So I can see that my minus 27.2 lines up with my first resistance. Okay. I'm gonna ignore the minus 61.8 because it's pretty far away from where price is currently at. Let's see if we have any other levels. Okay, I think I have a retracement over here. For retracement, remember we use these 5 levels. Okay, my 50% lines up, and so does my 38.2. Okay, so you can see the number of levels lining up over here at our first resistance. And I mentioned earlier that confluence areas tend to attract price, so we can likely expect price to continue to rise and be attracted to our first resistance. Okay, but you can see here my intermediate level, this dotted line, intermediate resistance. It does also have a bit of a confluence area because you can see I have 3 pivot point levels that are lining up with this area. I also have 2 Fibonacci levels lining up, and in itself, this is a multiple swing high resistance. Okay, it's actually even a overlap. Overlap basically means that there are swing lows as well as swing highs that are testing that area, which means that bulls and bears are respecting the area. Okay. Um, what else? Yeah, so you can see price kind of testing this area here. So you might see a bit of resistance in this area. Yeah, but yeah. So let's take a look at some indicators and see if price will be able to push up from it. The thing is that, okay, so we can see price moving above the Ichimoku cloud. So it's giving us a bullish signal. MACD is also giving us a bullish signal. And if you remember my daily as well as weekly analysis, we briefly saw that it's an uptrend as well. So a lot of upward pressure. So we are expecting prices to continue to push upwards. Okay. Okay, no worries. So, I just got a question. So the difference between the green and the red, green basically means uptrend or like bullish. So bullish basically means you're expecting prices to go upwards, like in an uptrend. And then red means downtrend, you're expecting it to go in downtrend. Resistance we normally use the color red because you're expecting prices to reverse off of it, you know? So that's kind of a downtrend. Support, we are expecting it to bounce off of it, which is why it's green, so uptrend. Okay, and then um I'm actually not too familiar with robo trading. I am aware of it, but I've never used it on my own. So you might have to do your own research on that. Yeah, but MT4 does provide access to automatic trading. Um, and yeah, but if you are looking to reduce loss and maximize profits, I think the most important thing would be to um work on your like ensure that you have stop loss levels, your risk management techniques, which we do cover in some of our webinars. maybe I'll just go through a little bit here. So in most of my live trading, we use resistance as well as support, like I'm doing now. But basically, you could go in with, I guess in this situation, the intermediate resistance will be your entry, your buy entry, and then your first resistance would probably be your take profit. Okay. Yeah, but I just name it resistance and support so that you guys have an idea of how to recognize these levels. Okay. But yeah, your take profit will probably be here, and we normally recommend you to place it below any confluence areas, any major confluence areas like this, like before any major confluence areas, so that you're able to catch price before it reverses off of them. And then I guess your first support in this case would be your stop loss. Okay. And for stop loss, we would recommend you to place it below any major confluence areas. Okay. So I guess in this case, we'll place it like here, I guess. Okay. So just in case price reverses, you won't get stopped out from here. Yeah. But we do go through in depth in a couple of our risk management webinars. But yeah, that's just I guess the basics. But the reason why we normally use resistance and support levels is so that you guys can recognize that, this level here is a support level, and then this area here is a resistance because we are placing it at this swing high. Yeah, and we're expecting prices to reverse off of it. Okay. Okay, let's look at, yeah, you're welcome, no worries. Let's look at another chart. Maybe let's take a look at gold. Okay, okay. So same thing, I'm gonna look at it from the higher time frames first. And we see price kind of reversing off of this multiple swing high resistance. Oh, yeah, if you're new to trading, you could actually we take a look at the forexarmy.com. Okay, so it looks like this. Okay, let me just drop it in the chat. So yeah, there are a bunch of free trading guides. So if you want to know how to draw a Fibonacci retracement, so if you're wondering about some of the stuff that I talked about today, you can go ahead and take a look over here. Yeah, it just covers some of the basics as well as some risk and some trade management strategies. Like I mentioned earlier, we want to place the take profit before any major confluence areas and your stop loss beyond it so that you won't get stopped out. Yeah. So it just has a bunch of trading techniques and trade management advice over here. And if you're new to trading, you can take a look. Okay. Yeah, there's also some MT4 guides and tools that you can download for free as well. Yeah, that's just FYI. Okay, let's get back to our charts. So now on a daily time frame, we see prices kind of ranging. Okay, on our 4-hour time frame, we see we kind of see an uptrend, okay? So yeah, let's add our support and resistance levels. So yeah, so if you're short on time, actually you can just pull out your pivot point levels to help you to identify any support and resistance levels like really quickly. See. Okay. Okay. So you can see here I have my first support. Mm, okay, here's my first resistance, and this level here is going to be my intermediate level of resistance because price is pretty close to it as of right now. Okay, and you can see at all of these swing highs and swing lows, we have a pivot point or resistance level that has been identified for us already. Okay, so I'm going to get rid of that so that it's not so messy when I go in with my Fibonacci levels. Okay, so 38.2 lines up nicely. Mm, okay, okay, my 61.8 also lines up nicely. Um, okay, my 78.6 lines up. Okay, I think that's all the levels that we have. Mm, okay, my 61.8 lines up with my intermediate level. And I think that's it. Okay, so we see prices. Let me put back my pivot points so you can see the levels. Okay, and then we're going to go in with our indicators again. So price is moving within the cloud, so it doesn't really tell us much as of right now. So if it moves above the cloud, it is a bullish signal, and if it moves under it, it's a bearish signal. So if it's within it, it's not really telling us anything. So I'm going to remove that. And MACD is giving us a bullish signal as well. RSI isn't really telling us anything. Let's see our EMA and SMA. Okay, price is moving above both of these indicators. It also looks like price is currently crossing over each other. So we could be seeing a change in trend. For SMA and EMA, these are lagging indicators. So typically when they cross over, um, it's after the trend has already started. So you can see here, when there was a downtrend, price crossed over only here when the downtrend kind of started like here, but it only started about here. This cross only happened here. So similarly, you can see over here, the uptrend started here, but then we're only seeing the cross happening over here. So just keep that in mind if you use EMA and SMA. Let's take a look at Bollinger Bands. Okay, you can see price moving. It's kind of cutting out of the upper band of the Bollinger Band. Okay, so yeah, also bullish signals. Okay, okay. So we can expect prices to continue to rise towards our intermediate resistance and towards our first resistance as well. Okay, let me know if you guys have any questions. Okay, I think we have time for maybe one more chart, just really quickly. Let's go ahead and look at maybe DXY. Okay, so DXY, we see this steady drop here. You see on our 4-hour time frame, this looks really huge, but on our weekly time frame, it doesn't look very significant. Okay, sure, let's do dollar franc instead then, because we don't have much time. Okay, so on our weekly time frame, dollar franc, that it's generally a downtrend, I think, over here. Okay, on our daily time frame, okay, on our daily time frame, it does look a little bit of an uptrend. Yeah, downtrend again on our 4-hour time frame. So let's see if we have a trend channel. Okay, no. Okay, let's go in with our support and resistance levels. So I'm going to go in with my pivot points again to help me to identify any significant levels a lot faster. Okay, monthly. Okay, I don't like there being so many levels. Okay. Okay, now let's go in with our support and resistance levels. Okay, we see this level here. Okay, this is our resistance, and then our swing low maybe over here. Okay, this is our first support. Second support, first resistance maybe just here. Mm, okay, yeah. So this is my second resistance. Okay. So same thing, now we go in with our Fibonacci levels. Okay, we can see 61.8 and 100% line out nicely. Okay, and then okay, we can see this Nike tick here as well. Okay, 127 and 161. Okay, I'm gonna add another level here. Okay, so even though there isn't any pivot point here, I do want to I want to highlight this level because we have a swing low here, a couple of swing highs, and it's also in line with this 127. So when price, I change this to my first support and then my second support here. So when price surpasses our 127.2, we can expect it to drop to our second support. Okay. Yeah, I think that's all the levels that we have. Now let's go in with some indicators. So we're expecting prices to continue to drop. Price is moving below the Ichimoku cloud, so it's bearish. MACD is also bearish. SMA and EMA. Okay, prices are moving below both, so also bearish. Let's take a look at Bollinger Bands as well. And you see prices breaking out of the Bollinger Band over here. So it's of the lower band, so it's also bearish. Okay, so the more indicators you can get to line up with your analysis, then is the better. Okay. Okay, I think that's all the time that we have for today. Thank you guys so much for joining me. I hope you guys found this helpful. Yeah, have a great rest of your week, and I will see you guys next week. Bye, everyone. Thanks, guys.